An interesting one. Market's down a little bit here after that Hail Mary. They tried to save it there at the end of the day yesterday with some headlines. Some of them were from Netanyahu, again, trying to find another way to be able to get oil out of the region by not using the Strait of Hormuz there. But like we've been talking about, the only thing the market's really going to be reacting to here is full-scale de-escalation. But to be quite honest with you, just like I was talking about in the video yesterday, the damage has really already been done. You've got this energy crisis forming in Europe here. A lot of traders, again, in the market as a whole, are starting to price in a pretty significant amount of rate hikes across Europe. Traders in the United States are now pricing in 0 rate cuts for 2026 here. So a lot of those expectations are moving. Yields are moving up. Again, we saw gold getting cracked to the downside yesterday, up a little bit today. But what we're seeing here is this big paradigm shift where really all throughout last year and going into this year, the market was expecting a period of global easing. And now this whole situation in the Middle East and energy prices significantly going up and most likely going to provide upward pressure to a lot of our inflation metrics. And again, that PPI report that we saw this week was what? That was without the energy price increase that we've seen as a result of the war. It was covering the period before that. So imagine what it's going to be now that we've seen these massive spikes in energy here. So we have a very, very interesting kind of next couple of weeks ahead of us. But to be quite honest with you, I love that we're seeing the market starting to finally move to the downside here. With all of the crazy bad news that we've had, a lot of market participants have just been expecting a big taco, walking back a lot of these actions here and kind of cutting everything short because of all the craziness that we've seen in the market. And I think this has really been the first week where the taco argument is starting to kind of go away. It looks like we're going to be there for a little bit. And the actions are going to continue, and oil is still remaining at those elevated levels here, hanging around at 95. And you guys that have been paying attention again to the TikTok videos, the YouTube videos, what were we talking about yesterday? If oil hangs up at these levels, CPI increases significantly here, which is going to make it very difficult for any central bank to cut rates. It's going to be very difficult for them to make that argument, even if the unemployment rate starts going up, because then you have a period of stagflation, which the market is really not going to like. So our plan is, again, going to remain the same. Focus on the post-earnings and then hunt the sector rotations. It's going to be really difficult, like I said in the pre-market plan to you guys, to actually get those sector rotations here, because if the market's just going to be drilling, a lot of things are going to be moving down. You could see that correlation to 1 and everything gets this nice pullback here. But looking at the S&P on a little bit of a larger time frame here, the daily, we are again dropping back down below the 200 EMA. I like that. I want to see us push down. The next level to the downside that we have is right around 650 to 651. Ideally, this right here is that 10% move down from the peak about right around 628. And then I'd love to see us get all the way back down to 613. That would be phenomenal. The amount of opportunity that would come in this market if we were to see that level of downside here would be absolutely phenomenal. So, ladies and gentlemen, it's going to be a very, very, very fun day, but it is that time of day again to say good morning to somebody in the live chat. If you guys would like to say good morning to me, we'd love to receive some good mornings over here. If you guys are new to the group, new to the stream, new to the channel, let me know. I'd love to welcome you guys in here. And as always, ladies and gentlemen, make sure you guys are hitting that like button on the way in. Costs you absolutely nothing to do it, but it helps me out a whole lot. Spreading these streams out to as many people who actually want to learn. Again, live every single day for you guys in LTMP. Friday's public live day here, so make sure that you guys are paying attention. Those of you guys that still need to hop in with us, you guys can get 2 weeks free. Link is at the top of the live chat for you guys there. That's not going to last for very much longer, though. But let's see who we've got in here this morning. Jerry, G-Moose, Dr. Bob, Todd, DJ. We've got Diego, Daily Taylor, Adrian, Alex, Ale, B-GC. Good morning, ladies and gentlemen. So, let's see. You guys slacking on the like button? A little bit. Little bit. So, for post-earnings today, we actually have quite a few. UAMY does qualify, but, like, it's a $9 stock. That's going to be a tough one. PL qualifies, Planet Labs, but it's up a little bit too much for me to really want this one. So, but we have seen a couple of these recently that have been the ones that are up a really significant amount in the pre-market, the ones like over 20% actually continue here. So we'll see if this one can continue having a mind of its own in this market. We also have FedEx over here that looks good. and Firefly Aerospace. Those could be very fun ones for us this morning. So that's kind of what we're going to be looking at here. Let me see. Fed hike back in play of oil shock persist. I'm telling you guys, what was up? What have we been talking about? There's a bond trade coming. The Bank of America says a Fed hike is back in play if oil shock persists. Bank of America says markets have largely ruled out Fed rate cuts and are now asking what could trigger hikes instead. The bank outlines 3 conditions. A stable labor market, Jerome Powell staying as chair, and sustained but moderate oil shock from Iran. Rate hikes become likely if oil holds around 80 to 100. Sticky inflation and rising energy prices are keeping pressure on the Fed, making cuts harder to justify. Powell has already struck a hawkish tone, emphasizing inflation risks and uncertainty. That's weird. Bottom line, if the oil shock lingers, the Fed could shift back towards tightening. That is, again, what did I tell you guys? We're gonna see these headlines and these reports come out talking about potential rate hikes. Now, the yields are not up enough just yet. The market is not necessarily pricing in hikes or fearful of hikes enough just yet to get yields to where I want them for a bond trade here. But they are starting to move. Look at the 2-year. I haven't even looked at the 2-year this morning, but I bet it's up a lot. Yeah. 2 years moving significantly here. So we're getting there. I think over the next month, especially if oil remains above like 90, you're going to see those expectations continue to go up and up and up for cuts and lower and lower and lower for hike, or up and up and up for hikes and lower for cuts. And that's going to push yields to the upside. That's why when we were thinking about kind of where money was going to flow when we saw this Iran conflict starting to escalate here, a lot of people were talking about the bond market, and I was like, no, that's not the smart place to go. Because just if you think about it, the bond market, what it's really going to be doing is pricing for a future Fed movements. Now, if part of the situation that we're in is going to require oil moving aggressively to the upside, which again, I was outlining for you guys at the end of January when oil was at 62, well, that's going to increase the inflationary pressure in the system, which is not going to be a bullish period for bonds. We'll get there, but it's not yet. But we're getting close to like really starting to look at it a little bit more. But yeah, that's what we're looking at here. We'll see what we get going into open. We have about 8 minutes. Any tickers and sectors that you guys want to look at, let me know. But again, this is a period that's very, very hands-off in the market. Like I've been telling you guys, and I tweeted this out yesterday, your long-term performance in the market is directly correlated with how comfortable you are sitting for long periods of time and doing nothing. And that's something that everybody needs to understand. And I think after last year, me telling you guys, especially during the spoil period where you guys were going absolutely nuts with everything, I was like, guys, there's going to be a period where you're going to have to sit on your hands. You got to be ready for it. And it's basically been that way since October. Rig still strong? I don't know. Let's take a look. Well, yeah, it looks good. But bet that's a good weekly setup there. I'm not really looking to touch anything in energy right now. It's already made the move. That's the energy's already made the move. It's like because the problem is like when I started talking about oil at 62, 63, it's like now oil's at 95. You have energy up across the board. Look at XLE over here, just absolutely going like just up and to the right. I'm not really that interested in doing these things now. I was back in January when I was outlining this, but now I'm not, you know? FedEx looks good. We got some potential for some fun post-earnings here. I probably won't go near UAMY. PL could be fun. FedEx could be fun. And then what did we have over here? Fly? Yeah. Fly could be fun too. Trump calls on Congress to pass the Farm Bill now. The SMCI stuff is crazy, too. That company is just wild. I mean, what's it down now in the pre-market? 10? 20? 26%. Oh. Ouch. Ouch, SMCI. Hey, maybe don't smuggle NVIDIA products to China. How about that? All right, let me see if there's anything else useful for us on the feeds here. Smuggling conspiracy? I don't even know. I don't think it's a conspiracy. I mean, they caught them doing it, I think, on video. Like, in the warehouses. It's ridiculous. Yeah, oil holding on here. Yeah, so we'll have some good potential post earnings here as well, guys. For today, it'd be nice to get one after a slow week. There's really nothing going on. Market trying to push up here a little bit, but everybody should want this thing lower. Every single person in the market should want the market lower. There's literally no reason to be like, oh, I want it to come back up, because if you've been paying attention, if it goes back up, you know what you're in? Chop nonsense. We need a capitulation type move. And if the administration was smart, they'd let that happen. The problem is everybody thinks he's gonna taco. But the damage has been done. Like, oil being where it is, like, the damage has kind of already been done here, guys. Like, oil's been above 80 like all month long. That's not good. That's not good, ladies and gentlemen. So 3 minutes here. Treasury yields extend climb. 10-year to year-to-date high at 4.32. What? Did it really just rip? No, we just saw that. We saw this way the heck up here in the pre-market yesterday at 4.4. Maybe it wasn't that high, but like. Oh no. No, that's just a glitch on the chart. Yeah, that is the high. Interesting. Yeah, so that's just a glitch on the 10-year chart here. But yeah, that's moving to the highs. That's exactly what we expect. There's going to be a move in yields, and that could be, like, we can take advantage of that a few ways. Biotech will be one of them. Like, I bet Lab U is getting murdered here. Not really, which is kind of interesting. All right. Let's see what we got today. And again, guys, make sure you guys are hitting that like button on the way in. Costs you nothing to do it. FedEx could be a very fun post earnings. Probably gonna throw this on here just because, like, that what do you call it? The daily chart is all messed up with that wick on the 10-year. Yeah, oil flat. And again, like, everything that the administration has done so far, draining the SPR, laxing the Jones Act, removing sanctions on Russian oil, potentially removing sanctions on Iranian oil, it's not doing anything to the price of oil. What it is telling you, though, is that they are prepared to let this situation go on for a little bit. Because if they wanted to really get the price of oil down, what would they be doing? taking measures to de-escalate and open the Strait of Hormuz. Fly is already ripping there, so careful with this. UAMY, I mean, it's valid. It's just going to be tough with fills on the $10 stock in that chain. All right, let's see. And then let's check back in on things like, how's Nio looking today? Down a little? Yeah, but that still looks great here. What's Palantir looking like? Palantir still looks really good, honestly. On the daily here. This still looks great. What about crypto? How's that looking? Are we moving back up? Yeah, kind of. I mean, you're still just back in this chop zone. You had a little failed breakout here off of this base. Yeah, PL, I mean, that is probably up too much for us to want to do anything with that. I'd love to see us get down to here today, like this 651. I'd love to see that. It's going to be tough, though, because this administration is going to try to move this thing back up with headlines. You should just let it drop. Because then you get a bigger pump later. All right, we're setting these 5-minute opening ranges. There's nothing really yet, obviously, because we're 2 minutes in. Palantir, crazy candle off the open. 10 years not doing anything yet. Where's oil? Is oil moving? Not really. If you break down here today, this pre-market low, you probably get to that 651. I think it's going to be tough, though. The intraday moves are tough. It looks like this market just wants to move overnight. Or if we get some weird headlines during the day like we saw. But this was Powell, though. SATL? What's up with that thing? Oh, that's running again there, too. This was like, guys, this was probably one of the craziest trades I ever gave you guys in LTMP. It was a 1 to 120 risk to reward trade. You risk 1% of your account and you make 120 back. It's ridiculous. That thing's moving, though. All right, here comes the market losing it a little. Where's FedEx? All right, so you're setting up this big 5-minute opening range. We may not get anything on that. PL might do it. I mean, it's right there. If you want it, it's there. But that's it's already up 32% on the day. That's aggressive. Dell's just running there, too. Oh, that's off of SMCI. And then PL broke to the top side there, but you're not 5 minutes in yet. SEDG. It's just running. All right, so FedEx probably not going to qualify. I mean, PL might. Slay of the day. Here's a tip for you. You don't buy stocks after they do this. Just letting you know. That's not when you buy them. That's straight chasing. Where's TAN? Is there anything else in the solar space that looks good? Enphase. FSLR. Nah. I don't even know if that's solar. I think I would assume it is. Here comes the market down below 655. Come on. Well, we need this first. 653.18 about to get broken. Then we can kind of go hunt that downside area, which I would love. Just let the market drip out today. That's what we want to see. We want to see this thing move down. Everybody should want to see the market move down. Like, think about what happened last year. You owned Solar Edge since 12? Nice. All right, we're 5 minutes in. I don't think we're going to get FedEx. PL might. Yeah, I don't think any of these post earnings are going to qualify here. Yeah, come on, market. Keep dripping out. Keep dripping out. Oof. This still looks like it's ready to rip. Like, Palantir really does look like it's ready to get going here. Over the next 2 weeks. Like, if the market shifts here, guys, if we end up over the next couple of, and Palantir holds here, this thing is going to be an easy, at least 500% trade. At a minimum. That looks ridiculously good. Where's software today? Yeah, software rolling over again. So again, remember what we were talking about with software? We got that bottom. We had some great moves in software as it was moving back up. Once we got into here, what did we say? Okay, well, it needs to show us that it wants to set up again as a sector and then start to make that push to the upside to continue to keep us interested in software as a whole. Now it's not. So we're not even looking at it anymore. All right, simple as that. Palantir, though, is software and defense, so that gets a little bit of a boost there, too. Actually, where is XA? Where's my XAR? It's interesting that these aerospace and defense companies are not, like, as a sector, are not raging to the upside. We're seeing a lot of strange movements across the board. I mean, PL could still do it, but that's kind of crazy. Stock up 30%. We traded on post earnings. I mean, it might work. We've seen a couple of them. I know Adrian's hit a couple of those. This is probably now the best chart in the market right now. Palantir. I haven't seen anything else that looks this good. Yeah, nice move down to start the day, but we saw that yesterday, and it just proceeded to chop around the entire day. All right, diesel spike hits the real economy. Diesel, not gasoline, is the bigger economic risk as it powers nearly every part of the supply chain. Prices have surged past $5 a gallon, sharply increasing costs for trucking, shipping, farming, and manufacturing. Businesses are already adding fuel surcharges or raising prices, with some losing customers as a result. The demand argument. Because diesel is embedded in almost all goods, higher costs ripple through the economy, pushing up inflation and squeezing margins. Even a 10% rise in diesel can lift overall consumer prices. With oil above 100 and supply risks elevated, sustained diesel spikes could drive broader inflation and slow economic activity. There you go. Come on, market. At least show us 653 today in market hours. Show us that. The interesting thing about what we're seeing too out of this action is that it's a lot different than what a lot of you guys were used to last year, where we saw what I like to call the cascades, where the market would break a downside level and then it would waterfall down and it would just go whoomp and it would just get slaughtered. This is different because, like, you can see, like, these moves, they come down and then they rage back to the upside. This is a different type of, like, downside move that I think a lot of people are used to, which is, again, why it's so important right now to make sure that you're just like sitting on your hands, because the amount of opportunity that's going to come in this market, just like we were talking about with Palantir. Palantir holds there, and eventually you get this de-escalation, it shifts, the market can shake off this short-term inflationary spike. That thing is going to absolutely skyrocket, and you're going to be nailing 1,000% trades left and right. But you have to preserve your capital in order for those moves. Like, there's like 2 to 3 really good periods throughout the year in the market. 2026 just hasn't seen one yet. We're going to get at least 1 or 2. Sometimes they get blended together. Like last year, we had that giant sustained period from like May until I don't know, September, October, where I was handing you guys like 1,000% trades like candy. That is coming. But in order for that to happen and to make it a little easier, you need to see the market get a little lower. Are yields pushing up here? They did a little, but nothing like the 1,000% trades best. I think everybody does. Those are always the fun ones. You just gotta wait for the conditions to be there. Remember, that's the easy part. The hard part is making sure that you guys can like sit there and be like, and understand why it's like, okay, this doesn't make sense to be taking a whole lot of action. I mean, PL could do it. Fly, no, we're not gonna be looking at that anymore. Where's AMD today? Honestly, AMD looks pretty freaking good off of these lows here. Holding up very well. Where's the Mag 7? Yeah, Mags is moving down. So what is that? Tesla's getting murdered there. Google. That looks like it wants to get drilled. What about Meta? Yeah, Meta moving down. Microsoft is, yeah, Microsoft right back down. But even think about it. Even in Mag 7, like, in the big tech companies, think about how much opportunity there is just in here. Like, I'm trying to like get this across to you guys. Like, this is like, if we get this nice move down that we want, which it doesn't want to right now, it's tough intraday for this thing to get these moves down without a headline. But the amount of opportunity here, guys, is going to be ridiculous. I can't wait until, like, I'm not going to be, like, we're down, what, 6% off the highs? I like to typically start hunting for things when we're, like, 8, 10, 12% off the highs. And then looking for signs of a bottom forming. Now, sometimes I'm an idiot and I start selling puts on things like Hood at 30, and then you guys buy it because you're like, oh, it's probably going to go up, and then it goes from 30 to 170 or something. Like, that one hurt. That one I should have just bought. That's happened a few times. It happened. Do you guys remember like 2 years ago on Palantir when I kept selling puts on it and I was trying to get, like, it literally one time I was trying to buy it at 22, I think, 25 maybe. The stock drops to like 22 and I'm like, all right, perfect. I'm gonna be able to buy this thing at a good level. Then they had earnings and they ripped it to like 29 and I was like, you got me good there. That stunk. Still made money. That's like the worst money to make, though. That's when you guys understood the, oh, if SCV sells puts on something, we full port it. It's like, okay. I did it on coin a few times, too, and you guys hit it. No more of that. Palantir looks really good here still, though. Market just kind of chopping around. Just bleeding out. Just keep bleeding out. I mean, it was moving up decently at like futures open and a little bit overnight last night. Then waking up this morning, I was like, oh, there it is. So I would expect today to be another day of just like choppy random action. And then we'll see how the headlines go over the weekend. And we'll kind of go from there. Where's semis as a whole? Semis actually look good here. Not good, like relatively good, is what I mean. Is Nvidia moving off of this SMCI stuff? Not really. Where's SMCI? Is it bouncing? Oh my god, they're buying it. Oh, they're committing potentially acts of treason? Long. Long. Treason equals long. I wonder if they're going to try to... I mean, is he a U.S. citizen? I thought he moved to the U.S. He might be a citizen. I don't know. I thought I saw something that he moved to the U.S. He could completely be a U.S. citizen. I don't know. But I saw something that was like his story where it was like he moved to the U.S. And I was like, oh, from where? Here come the yields. Here come the yields, ladies and gentlemen. That's what we want to see. Get those yields up. We're going to have a bond trade soon. Over the next couple of months, I think we'll be able to get one. A lot of you guys were not around for like the bond trades of like the last 2.5 years. Like there were probably 2 big ones where it was just bottom tick, top tick. The top tick, I missed it by like a day or two, I think. Where was it? I'll show you. It was right here. I think I called it on this day. Bottom in bonds, top in yields. It was this day right here, Friday, January 10th of 2025. And then the last one was the day before Powell started cutting right here. Tuesday, September 17th, 2024. Bottom in bonds, and then you just went on an absolute ripper. Macro trades, guys, are sometimes the most fun for me. I like them the best. Because you can just play off of, it sounds bad, but you can play off of how stupid the market is. Like, at that time, especially the one right before the Fed meeting where Powell started cutting, they were pricing in, like, an absolutely ridiculous amount of rate cuts coming in, like, the next couple of quarters. And it was like, well, in order to price in more, which is required for bonds to continue going up and yields to continue going down, economic conditions need to continue deteriorating, which didn't make a whole lot of sense, given the data that we saw and the trends of the data. So everybody was getting overexcited about rate cuts, and we were like, nah, you guys overpriced it. On it, PL is still cruising up there. Funny how much market seems to be people just looking at charts. Well, it's all behavioral, remember. That's why what we do in like when conditions are good in the market, it's why it works so well. Because we're getting in at that first little point of like the of a move, and then everybody starts chasing it higher because they're afraid of missing out. Yeah, Trump's criticizing NATO allies right now. I can look at FAT, yeah. I think there's going to be a lot of good... Ooh, yeah, that looks interesting. There's going to be a lot of good opportunities in crypto soon. Where's, like, XRP? Because a lot of these, like, had decent setups, but, yeah, it's going to look like Bitcoin. But then you got that, again, the failed move here. So you got to give this probably another couple of weeks before we can kind of potentially look for that bullishness in the crypto space. I got a lot of traveling to do over the next few weeks, too. Going a lot of different places. Back on the road. No tankers loaded with crude oil have sailed through Hormuz in the past 24 hours. Yeah, oil's not doing anything. It's just holding on here. Post earnings? I don't think so. I mean, it might be moving off a fly, but I don't think so. Oh, yeah, it could be. It's raging there. Yeah, that thing's nuts. Off the 200. We've been talking about this a little bit. Not really. Yeah. FedEx didn't qualify there. I think PL is the only one that has a chance for it. Palantir still looks great. People are so bullish for this year, but it feels like this consolidation will continue forever. That's what everybody always thinks. That's where a lot of the fear comes from in the market, and I just think that's silly. It's like, no, it's not. This is also, we're not consolidating anymore. We are selling off. That's why everybody gets so afraid. They're like, it's gonna be forever, the market's over, and it's like, no, it's not. It's like, you're gonna get these moves down. Once we shake out everything and say, okay, now we're at a decent spot, we can get through the next round of inflation data, and then you have the Trump meeting with China. Oil eventually moves down, hopefully. Ooh, I'm sore. Oh. Like, everybody always, like, when the market's moving up, people think it's going to last forever. When the market's moving down, people think it's going to last forever. When the market's moving flat, people think it's going to last forever. And that's, like, it never does. None of those moves end up lasting forever. Pentagon sending thousands of additional Marines to the Middle East. Uh-oh. Here we go. Getting a little move down. Come on. Come on. It might be off that Pentagon stuff. Pentagon sending thousands of additional Marines to the Middle East. Yeah, I mean that could easily send the markets lower. Because you got to think about it. Like, the Trump administration is now has been taking action to try and limit the massive spike in oil prices that we've seen. But none of it's worked. In every single one of them, what do they start highlighting? It's like, oh, we have X amount of weeks of supply. Like, I think they were talking about the Iranian oil as being like 2 weeks. Well, the SPR drain was like 9 days. But that's going to take like months in order to actually get through the system. So what they're actually doing here is they're guiding for like the conflict taking longer than what they have consistently said. They're like, oh, it's going faster. But like, if they actually wanted to get the price of oil down, they'd be like, they wouldn't have done what they did in the first place. And even at this point, they'd be like, okay, now we're going to work towards some de-escalation efforts, open the Strait of Hormuz, get the price of oil down, not have this energy crisis in Europe, and then kind of deal with the inflationary spike aftermath as the months come on. The longer that they let this go on, the more and more and more of a problem it becomes, because the damage has kind of already been done. It's just further damage happening to the system. Oil trying to get above 96 there at 95.86. Yeah, it's moving up there. Here comes the market down. Thank God. Come on, sell it. I want to see at least this low get taken, but really today I want to see 651. They sent your old unit last month. Wow. Yeah, so it looks like we're moving off of that Marines getting deployed in the Middle East. That's what it looks like we're moving off of here. Palantir now moving down. Here come yields. I'm telling you guys. There's oil at 96. Yeah, and again, as you guys are filtering in here, make sure you guys are hitting that like button. Costs you nothing to do it. Helps me out a whole lot spreading these streams out. Hopefully you guys have all been paying attention to the caution. I've been just screaming. All right, what else do we have? Here we go. U.S. sending 3 warships to the Middle East. The Pentagon is sending 3 warships and thousands of additional Marines to the Middle East, even as President Trump insists he won't put American boots on the ground in Iran. That's the thing we're seeing here. We're seeing like, oh, they say they're not going to do something, and then we see headlines like this. So that's why oil's not moving, because the market doesn't necessarily trust anything that's coming out of this administration here. Oh, we're gonna drain the SPR. We're gonna reduce sanctions on Iranian oil. But the only thing that they care about right now, in terms of the what the market cares about, is actual de-escalation efforts to open the Strait of Hormuz and get this behind us. Until that happens, we're gonna keep seeing this. Roughly 2,200 to 2,500 Marines from the California-based USS Boxer Amphibious Ready Group and the 11th Marine Expeditionary Unit are heading to the U.S. Central Command, responsible for all American forces in the Middle East. This is the second massive deployment of Marines in the past week, after the Pentagon sent the Japan-based USS Tripoli and the 31st MEU to the region. The news comes just a day after Trump said he had no plans to put American troops on the ground in Iran. Think will he end up getting a draft? No, they're just like they somehow figure out a way to impeach him. Like, there's no way. It's interesting now though, with like, when you think about it, the actions that we've seen in the Middle East over the last, I don't know, 20 years. All of these, if this was the 1930s or the 1910s, would easily cause a world war. Easily. And it almost is that like nuclear deterrent that is stopping a lot of that from happening. Because like, think about the situation that we're in right now. If that were to unfold, what would happen? everybody would look at the U.S. and be like, "What? You're crippling our everybody's nations." Because like think about what's happening in Europe right now. Energy crisis. Uh-oh. Are they going to be happy about that? No. Do they agree with what's going on here? No. So it's interesting when you look at it from that perspective. You're like, I mean, the fact that everybody's showing restraint here is pretty crazy. Russia and Ukraine is a good example of one. That's another one. It's like, come on, market. Keep going. Keep going. Lower. More lows. Come on. Sell it off. This is when I start to get excited. Like, if we can get down to here, I'll be really excited. Now, we're going to see headlines. If that happens, if we start getting all the way down here, by the end of the day and over the weekend, they're going to try and pump it. But like I've said, it doesn't matter. Those are like it would be amateur hour to try to long on those pops. So, where are things like Nio? How is that looking? Yeah, Nio now is getting clipped off of that, but still looks great after earnings. Sofi. Yeah, Sofi bleeding out there as the market goes risk off. Makes sense, especially with crypto. T is having a decent day. Flight to safety. I mean, yes and no. Like, where's gold right now? Gold's not doing anything. Like, gold's selling off. It's. I would say this is more of a flight to cash. Like, yeah, you might see that, but the problem is that those are already up so much. Like AT&T here. Like, look at this. These are already up like a very significant amount since like all of this unfolded. Now, it's not like running so aggressively. Like, I see their point here because like even if you look at the yield here too, you're getting 4%, which is pretty good. But like, if you're looking for yield. 10 years yielding 4.32 right now. Why not buy that? You know? Well, I know why they would not buy that because, again, people are going to be scared to go into the bond market. And bonds have not offered that same hedge that they have in years prior. And it really has to do with just like how much more active the Federal Reserve is in these environments. They're moving rates all over the place. They're giving more guidance, and that is going to affect the bond market. The press conferences, like all of that is having an effect. Here comes the market. Come on. Here we go. But cash with inflation, probability of going higher will lose value. Right. But think about it this way. Cash in the market or in any investments can easily lose more. So the question now is, where can you put your money that you're effectively going to lose the least? Is basically what people are looking at in the market. And I think a lot of people would rather, like, again, like we've been saying, stay in cash, wait for the dust to settle, because, like, to be quite honest with you, do we think that oil is going to stay above 95 forever? No. You're going to see this bottom eventually, and it's fine to sit in cash for a little bit. It's not like we're going to see, like, a 3-year inflationary spike. Here we come. Pre-market lows. Come on. Hit it. There it is. Where's USD JPY? How much back up is it? So that's dollar strength today. That's interesting. Yen weakening. That's an interesting move there. Here we go. Exotic cars. Long SCO. You're getting there. Where is it today? I mean, I wouldn't do it now. It's not there yet. I'd give this like another week or so. Like you could, because the thing is, you want like you're thinking about the timing of like when the de-escalation could happen, and I think we're like 3 weeks away of then seriously thinking about that stuff. So now that big next level, guys, here is that 650, 651, which is this big low. We lose this, I think we're going down to like serious low levels. 575M. Oh, really? If you have good earnings like early season, do you think the market's going to spike after all this bad news? It depends on what the macro situation looks like. Because remember, like the 3-pillared approach that I teach you guys in the mastermind, everything's always going to default to the macro picture. And it probably will be difficult for a lot of companies to report good earnings with this inflationary spike and demand moving down. Like we just saw with that diesel headline, it's like people are losing customers. So we're getting close here. We could do this today. No headlines yet, though. Where's SPX? Are we at 6,500 yet? It's got to be really close. Yep, really close. And that is what level of a drawdown off the highs? I think it's like 6, 7? Yeah, 6.6%. Thank God. Finally, some downside. UBS still said it's still bullish on stocks. No, I know. Like, I don't think. Remember, I don't think that this is just gonna go down and stay there. I think this is gonna go down, chop around for a little bit, and then right back up. Because you got to think about what the playbook is for this year. So remember this area right here? If we get through here, this is when I would start then considering looking at longer term purchases. Ideally down here, really ideally down here, 613. Is that red line the 200? The 200 EMA, yes. Traders price in. Here we go. Guys, I can't make this any more clear. Traders price in 50% chance of a Fed rate increase by October. What are yields doing right now? Are we at 4.4 yet? I'm almost. No. I really want to see it back in this zone. We get yields up in here. There's gonna be a good bond trade. I'm telling you. Because they're gonna overcook this. Like, because if you think about it, what they're looking at right now is they're thinking about like, oh, if we could have this long-term inflationary impact similar to what people were projecting with tariffs, what does that mean? It's like, well, rates could go higher, they could stay higher for longer, and then what does that do to yields? Well, again, it would push yields a lot higher, but that's not necessarily realistic. This is going to be like not short-lived, but it's going to be like in the medium term. But I think a lot of the market right now is going to start looking at this as like a long-term thing. Also, this wick right here is nonsense. When you take a look at the 15-minute here, the 10-year is at the highs. So I am happy we finally got a nice little push down here. We hang out down below here. They can try and save it with headlines all they want, but it's not working. You can get those short-term relief bounces, but remember, the only thing that the market really cares about here is like a statement of de-escalation and then action of de-escalation. That's what it cares about. It doesn't care about like, oh, we're going to remove sanctions on Iranian oil. They're like, yeah, but that's just a Band-Aid on a bullet hole wound. That's all that is. Talking about TLT or TMF? Yeah. I mean, I would honestly think about ZB too. Salesforce? AT&T is still running there. Salesforce does not look good. That's just too wonky. Yeah, AT&T is still running there. None of the post-earnings qualified today either. This is perfect. I love seeing this here. Oops, I didn't want that. Oh, I can just switch to the other one. Yeah, I really like what yields are doing. I really do. What website? TradingView? Palantir? Yeah, Palantir does look good. I think. I mean, let me see if is it still above the 200? Meh. I mean, yeah, it's got to pull up, but waiting for a rebig entry? Oh, no, that's not a bad idea. Well, again, though, it's like, it depends on what the market does. Like, yeah, this chart, I mean, this is probably the best looking chart we see in the market right now. Silver down 3%. Again, I would expect gold to be continuously moving lower off of this as like the, yep. So, again, this is a result of a paradigm shift. Everybody was expecting global easing coming into this year and all around last year. It's why we saw those big increases in gold. But now that's changing with the developments that we've had. Hood going south. How much is it getting hit there? Where did we want Hood? Why did I want it here? 50? I mean, this is a decent spot, 66. I honestly, like, if we see the Hood to like big breakdown from here, I'd probably buy that. I'd be really heavy into fintech, which is fine. I just like, but this has like, I still love this as a company. Chuck Norris dies? Short-term interest rate futures price for a likely Fed rate hike in December. Oh, it's almost as if I've been screaming about this. I'm trying to find the tweet. Here come the yields. Ooh, back down in the market. Uh-oh. Come on, market. 651. 650. Let's see it today. Let's get one more of these candles to the downside. $3 candle. Oh, that'd be nice. Am I going to trim gold? No, why would I do that? CLS? Let me look. It's not a bad chart. It's just not great. New lows. Come on, market. Come on, market. Do it. Oh, I'd be so thrilled if we could see 651 today. I love this. Come on. I want to see a cascade. Boom, right down. Right through the level. New lows, come on. Come on, this is stop one here. We're really close to it. I tweeted these levels out a while ago when we were back in here. This is the first one. We're really close to it. This one's a 10% drawdown. This one's a big level from the prior highs. Again, guys, remember, this is why I've been saying I wouldn't be buying dips yet. Yeah. Dangerously close here. Now, with a level as big as this, we'll see if they can get through it. They've done this a few times where they bring it really close and then they rage it higher, but who knows? On a day like today, they might just slice through it like butter. I mean, dealer exposure here is probably pretty extended. If this thing keeps going, it could just cascade. Like I was talking about yesterday, I want to see like a big 2% down day in the market, 2-3% down day, and a couple of them. see. Yeah, they brought it close and they popped it. Darn. I just want to see a bloodbath. Finally, we get some sort of excitement here. I like this a lot. They popped it a little. Let's see what they want to do. This is exactly what we want here. Keep selling it. Where's the oil? Up a little. It's right around 96. Nothing too crazy. So let's see if we get any more headlines. Trump admin announces partnership with SoftBank and AEP Ohio. SoftBank plans a giant Ohio AI data center powered by gas plants. Yeah, gold down over 1% makes sense. There will be some more gold opportunities mid-year. It's the same. It's really similar to this. If yields keep going up, again, it's the same thesis. It's like it's pricing in now, not global. It's like depricing global easing, which is going to hurt gold. But all right, ladies and gentlemen, I got a lot of stuff I got to get going on today. So that is going to wrap it up for us this week. Really, finally, we're seeing some nice solid downside here. That's exactly what we want to see out of this market to get us closer to that point of being ready to go back risk on. So everybody, enjoy the rest of your weekend. For those of you guys that still need to jump into LTMP with us, make sure you guys take advantage of that 2-week free trial. That is pinned to the top of the live chat there for you. It's also in the description. For those of you guys that need more Apex accounts, no more intraday trailing drawdown, which is crazy. Use code VIX. I believe they're still doing an 85% off sale. on that one, so make sure you guys are taking advantage of that. But folks, this is exactly what we want to see out of the market here. We're setting ourselves up potentially for a bond trade coming over the next couple of months, which is going to be fun. We're going to get some nice dips on some really good names here. I'm excited. This is exactly what we want to see. So folks, I will see you guys later. Peace.